Property investment is one of the most popular ways of investing in the UK, and providing you follow some simple steps, it can be a great long-term investment too. I've got 20 of my best tips to help you succeed, and I'll be covering those in 2 videos. This video will be the first 10. Hi, my name is Mark Lloyd, and I'm co-founder of Property Master Academy, and I've also been a property investor since 2005. Now, if you're new to this channel, then please make sure you like this video and hit the subscribe button so you're notified of further videos as they are uploaded each week. If you're unsure where to begin, then our top tips are the ideal starting point. Whether you're looking for a single property or you'd like to grow a large portfolio, following these tips will put you on the right path to success. So number one is get educated. Now, if you're a beginner, it's important that you take the time to understand the basics of property investment. The property market continually changes, and so it's important that you have a solid foundation of knowledge that will help you to keep up with and understand these changes. When I started out, I knew nothing about investing in property apart from owning my own home. I bought my first buy-to-let from an email in 2005 and knew very little. So in 2009, I attended some property investment training, which opened my eyes up to the vast number of ways you can make money in property. It wasn't just about buy-to-let or buy-to-sell. There are several other ways of making money in property. It was very much like a cookie jar. All looked good, but of course you can't eat them all at once. And it's the same with property investing. There are lots of strategies, but you can't do them all at the same time. Investing in a property is a big step, so you need to make sure that you understand what it entails. So what is property investment? Well, in its most basic form, it's about acquiring or controlling a property with the intention of making a profit. A property is acquired or controlled to generate a return on investment, ROI. This could be rental income or capital, for example, in the case of a flip, that's a buy to sell. Tip number 2, be aware of the risks. Now, when you're assessing whether property investment is right for you, it's easy to get carried away thinking of the money you're going to make. However, every investment carries some risk, so it's just as important to understand these too and how you can mitigate them. Firstly, I would suggest taking a look on our YouTube channel. You'll see a number of videos there, but look at my videos on how to invest 10,000, 50,000 and 100,000, as these will give you an idea of what you can do. But whichever strategy you follow, it's likely you'll end up tying money in the property for a period of time. Now, personally, I like to make my money work as hard as possible, so I use the BRRR model as much as possible. Also, check out my video on that strategy as well. Now, we're currently in a rising market, but property prices don't always go up, so be prepared for when they go down, as they did in 2008 and 2009. But outside of a crash, property prices will still fluctuate as well. The good thing about property investing is that if you can hold on long enough, even if there is a property crash, you will eventually make money, because we're still an island and we still don't have enough properties for the current population. If you are adopting one of the buy-to-let strategies, then tenants will be a key factor that can impact your investment. Tenant selection, whether by you or an agent acting on your behalf, is critical. Tip number 3, develop a detailed understanding of what property investment involves. Whilst getting educated on strategies is vital to understanding how to make money in property, it is also important to understand what property investment involves, both in the planning stage and thereafter when you've secured the property. This understanding will help you to establish whether property investment is right for you, and if it is, it will help you to prepare for what lies ahead. Regardless of the type of investment property you purchase, you will need to understand the various rules and regulations that you must follow. This includes, for example, tenancy law, licensing if required, planning if required, and so on. You shouldn't rush the process of investing in property. Spending time researching not just the area where you want to invest, but the type of tenant you want and the strategy you want to follow, these will all pay dividends in the long term. Do you want your property managed, or will you manage it yourself? Whilst you might start off managing your first property, as you grow, that will become much harder. So you may have to have them managed, in which case you'll need to research letting agents to find the right one or ones to manage for you. Tip number 4, plan your strategy. Now, you should consider which strategy would work best for you. It's not a good idea to try and do all of them at once if you are just starting out, in particular, as there are far too many. The most common strategy tends to be buy to let, but there are many others, some of which are more specialised and niche than others. This is something we cover in more detail on our 2-day property investing masterclass, so check that out on our website for more details. Tip number 5, consider the type of property to invest in. Now, once you've decided on your strategy, you need to research the different types of property to invest in. This also includes deciding between an off-plan property, a new build, or buying a property that needs refurbishing, all of which offer various advantages and risks. It's therefore important that you research these aspects of your investment thoroughly before deciding which approach to take. Investing in a new build is more for first-time buyers, in my opinion, but they have become very popular due to the government's Help to Buy scheme, which helps first-time buyers to secure a new build property. For those that want to invest in new build, the main benefits are that it's cheaper to run, as they have been built in accordance with the latest building environmental standards and regulations, and they also have a 10-year warranty, providing greater reassurance and peace of mind. Off-plan properties are new builds that haven't yet been completed and are usually offered at a discount. Now, these are potentially good for investors, but will depend on where the market is at the time and the time frame until completion. But in a rising market as we have now, you could potentially flip on that contract and make a profit before you even need to complete on the purchase. As for properties requiring refurbishment, these are, in my opinion, where you'll make the best return using the buy, refurbish, refinance, repeat strategy. By the way, if you're enjoying this video, then please hit that like button so more people like you get to see this video, and also hit the subscribe button so you get notified when the next video is published. Tip number 6, research the right location for your property. When it comes to deciding on where to invest, there are several considerations to make to ensure that you select the right location for your property investment. Picking the right location is key to attracting the right tenants and earning a high return on your investment. These considerations are also key for property developers too when planning where to build new homes. So what to look for in a location? When deciding on a location, it's important to consider the available data that shows any relevant trends and forecasts, such as house prices and rental yields. It's also vital that you balance your property goals with the needs of potential tenants. As such, you should avoid buying a location solely because it suits you. Conducting research into the right location will pay dividends. Now, here are some things to consider. Firstly, a location that's desirable for tenants. One of the main factors to consider is the nearby amenities in the area, as these are likely to attract potential tenants. Whilst the tenant may love the rental property, it's likely that they want to be in a good location that has many nearby amenities and good transport links, or indeed walkability. Jobs and schools. Similarly, potential tenants are likely to be drawn to areas that have plenty of job opportunities, and some may even want an area that has a range of schools to choose from. The latter will depend on your target demographic though, as it is only really applicable to families or those that are looking to start a family. The distance between you and the property. Now, this will only be of relevance if you are going to manage the property yourself. If you're then, ideally the property shouldn't be more than 1 hour away. Rental yields in the area. Analysing data that provides an overview of the best buy-to-let locations in the UK based on rental yields and other data can help you to make an informed decision about where to invest. Generally speaking, you will achieve high yields in the north of the country and Scotland, but the most important figure is your return on investment, the amount of money you make on the money you have in the deal. Look at property prices in the area. Now, whilst this is an important factor, it's important to combine research on rental yields with information on house prices to give you the best returns. What is more important is whether there is demand for housing in the area. Tip number 7, understand all the costs. And many investors make the mistake of failing to think beyond the property price. They do not consider any additional costs that may occur as a result of their property investment. To make sure that you are prepared, you should make sure that you know which extra costs to expect and how they fit into your budget and your affordability. For example, you will have stamp duty to pay at the additional rate, solicitors' costs, valuation fees for the lender, mortgage broker fee, insurance, letting agent fee, mortgage payment, and a contingency fund. Tip number 8, be sensible with your first investment. Now, whilst it may be tempting to invest a lot of money into property, especially if you're aware of the potential benefits, you should avoid the temptation and remember to be sensible with your investment. For some, this may mean starting off small with, say, a buy-to-let or a rent-to-rent, maybe deal sourcing. For others, it may mean starting with flips or development. Remember, there's no deadline on the success of your investments. Just make sure that you invest wisely and with knowledge. You might want to consider getting yourself a mentor, someone who has already achieved what you want to do. And in fact, this is an area that we specialise in, so drop me an email and let's schedule a call to see if there is a good fit, if that's something that might interest you. Tip number 9, have the right attitude. The most important thing above all else is to develop the right attitude and the right mindset. The most successful property investors are the people that remain focused, patient and knowledgeable throughout the process in order to overcome any challenges and to seek out the best opportunities. With that in mind, here are some tips for developing the right attitude as a property investor. Firstly, stay positive. Remaining optimistic throughout is essential. Research has shown that positive thinking can help people to make better decisions and focus better on their long-term goals. Remaining positive will make the experience much more enjoyable too, and will help you to keep a clear head when it comes to researching and decision making. Having a positive mindset will help you to stay motivated too, which is a good skill to have as an investor, especially if you're faced with challenges that you need to overcome. Check out my social media channels for a daily dose of motivation. Secondly, always be willing to learn. The best investors never stop learning. You should always be willing to learn not only from your own experiences, but from those who are more experienced than you. When I started out, I took on a mentor to learn from them and to show me the path to success. In fact, I still have a mentor today, some 17 years later. Tip number 10, consider using a letting agent. When I started in property, I never wanted to be a landlord. So I decided very early on that I was going to use letting agents to manage our properties. Why? Because I wanted to be a hands-off investor and grow a large portfolio, which would be very difficult if I was managing the properties myself. It also frees up my time to do other things such as property development, financing with our crowdfunding platform, and mentoring other investors. When selecting an agent, we prefer the smaller, more independent companies who are often landlords themselves, so they kind of understand better what you are looking for. The large agents often have people who are still living at home and think all landlords are rolling in it, so don't have an eye for costs. Now, if you're looking to outsource the management of HMOs, then make sure you use a specialist HMO agency. And lastly, as Robert Kiyosaki said in his book Rich Dad Poor Dad, pay your advisors well. Don't try to negotiate too much on letting agent commissions, as a good agent is worth their weight in gold. On the next video, I will cover tips 11 to 20. So there you go. I hope you enjoyed the video. If you have, please hit that like button so others like you get to see the video, and subscribe to our channel. Appearing on your screen right now will be some more videos that will help you in your property journey. Thanks for listening.